Welcome back, my friends. There have been ongoing developments in the cryptocurrency market. So I am updating you more often on this subject because it is a rapidly changing situation. Today, we are hearing news that crypto firm BlockFi has filed for Chapter 11 bankruptcy. It's the latest in a series of crypto bankruptcies, following FTX, Voyager, and Celsius. As you probably know if you follow this channel, cryptocurrency exchange FTX filed for bankruptcy a little over a week ago. And the fallout from the FTX bankruptcy has sent shockwaves through the cryptocurrency world. Fears of crypto contagion are growing as another company's finances wobble. Cryptocurrency exchange company Genesis is now rumored to be considering bankruptcy. Wall Street investors are fearing contagion from FTX collapse. And there are a number of cryptocurrency companies on the daily watch list. Genesis, Coinbase, Binance. The crash in cryptocurrency prices shows no signs of slowing. So there could be a long line of dominoes waiting to fall. But where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And what does this mean for the future of the United States? But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Distressed crypto lender BlockFi has now filed for Chapter 11 bankruptcy protection. The filing was made in the United States Bankruptcy Court in New Jersey. At one point, BlockFi expected to be acquired by none other than now bankrupt FTX. The BlockFi bankruptcy filing listed more than 100,000 creditors. It also listed liabilities and assets ranging from $1 billion to $10 billion. Notably, the BlockFi bankruptcy filing also listed an outstanding $275 million loan to FTX. You remember FTX, Sam Bankman-Fried's now bankrupt empire. BlockFi has a Bahamian subsidiary, just like FTX. The BlockFi Bahamian subsidiary filed for bankruptcy in the Bahamas at the same time the bankruptcy filing in the US. BlockFi's largest disclosed client has an account balance of nearly $28 million, according to the filing. BlockFi looks forward to a transparent process that achieves the best outcome for all clients and other stakeholders, Berkeley Research Group's Mark Rentsy said in a press statement. Berkeley Research Group, or BRG, serves as BlockFi's financial advisor. BlockFi offers a trading exchange and interest-bearing custodial service for cryptocurrencies. BlockFi is just the latest crypto company to fail. After the implosion of Three Arrows Capital, and the bankruptcy of FTX, and its wholly owned crypto hedge fund, Alameda Research, BlockFi is based in Jersey City, New Jersey. The company already halted withdrawals of customer deposits almost 2 weeks ago. At that time, BlockFi announced that it had significant exposure, Sam Bankman-Fried's crypto exchange FTX, as well as its wholly owned crypto hedge fund, Alameda Research. We do have significant exposure to FTX and associated corporate entities that encompasses obligations owed to us by Alameda, assets held at FTX.com, and undrawn amounts from our credit line with FTX, US, BlockFi previously said. The company began discussions with restructuring advisors just days after FTX's bankruptcy filing. A representative from BlockFi did not immediately respond to requests for comment. BlockFi was most recently valued at $4.8 billion. Many crypto firms are teetering on the brink of bankruptcy following the collapse of FTX. In July, FTX swooped in to help BlockFi stave off bankruptcy. This past summer, FTX extended a $400 million revolving credit facility to BlockFi. The credit line was seen as a last-ditch effort to stave off bankruptcy. And FTX actually offered to buy BlockFi. But now, both companies have filed for bankruptcy. Cryptocurrency exchange FTX filed for Chapter 11 bankruptcy on November 11th. Since then, fear and contagion are spreading across the entire crypto ecosphere like wildfire. Somewhere around 130 other companies are being roped into the BlockFi bankruptcy case. Alameda Research, FTX, and others. In my 40 years of legal and restructuring experience, I have never seen such a complete failure of corporate controls, said FTX's new CEO John Ray in a court filing. And such a complete absence of trustworthy financial information as occurred here, Ray continued. If you recall, John Ray served as CEO of Enron after that company filed for bankruptcy. FTX went from a $32 billion valuation to bankruptcy as customers rushed to liquidate their accounts. FTX customers demanded withdrawals immediately, causing FTX to experience a liquidity crisis. This is the cryptocurrency equivalent of a run on a bank. In response, rival exchange Binance invalidated non-binding agreement to buy the company. Gross negligence at FTX has been highlighted by John Ray. A substantial portion of assets held with FTX may be missing or stolen, John Ray also added. FTX lists more than 1 million creditors in its bankruptcy filing. This suggests that there will be a huge impact of its collapse on crypto traders worldwide. Not to mention the many other counterparties connected to Bankman-Fried's empire. As you might imagine, there are fears that the collapse of FTX will lead to more destruction in the cryptocurrency world, and create a contagion that might hit almost every crypto investor in the United States. That includes everyone from individual investors to major Wall Street institutions. Speculation is swirling that cryptocurrency trading platform called Genesis will be the next domino to fall. So far, that has not happened. But how far off can it be? But Genesis has reportedly warned potential investors that it may need to file for bankruptcy. Genesis is experiencing liquidity problems as investors pull funds from their cryptocurrency accounts. If it does not manage to quickly raise a significant chunk of cash $1 billion, it could have to file for bankruptcy. Crypto contagion is a real possibility in the decentralized blockchain system. And since digital currencies are unregulated, there are virtually no investor protections. Cryptocurrency companies are not bound by standard accounting procedures and controls. That means that these companies can be tangled up with one another in unclear and unprecedented ways. For example, FTX had deep ties with about 100 other crypto companies around the world. And, as we are hearing from the FTX bankruptcy, it had more than 1 million customers. That paved the way for its financial troubles to spread quickly. But the collapse of FTX stretches well beyond companies and investors with direct exposure to FTX. The spectacular implosion of FTX has stoked volatility in cryptocurrency ecosphere. And it has led to collapsing values of cryptocurrencies and Bitcoin. Remember, FTX was valued at more than $30 billion earlier this year. Actually, cryptocurrency values have been falling steadily this year. And now, they are falling even more. Not to mention that is causing a major wave of panic. Gemini Trust partnered with Genesis. And Gemini account holders pulled more than $400 million out of their Gemini accounts. If you recall, Gemini was founded by the Winklevoss twins, Tyler and Cameron. And Gemini briefly suspended its yield-paying program that was backed by Genesis. So, the failure of Genesis could cause the collapse of Gemini Trust. Binance and Coinbase are two other cryptocurrency exchanges that are, for the moment, still operating. But both have experienced sizable drawdowns recently. Genesis works with large institutional investors instead of bringing everyday people into the crypto world. So, Genesis would probably have more influence on the financial system. Alameda Research, the cryptocurrency hedge fund founded by now former FTX CEO Sam Bankman-Fried. But Genesis reportedly does own some FTT, which is the native cryptocurrency created by FTX. The value of FTT has fallen from an all-time high of $79.53 to less than $1.50. And there is now speculation that Alameda Research purchased a lot of FTT at its height prior to its collapse in value. At one point, Genesis reported that it had $175 million in a locked FTX trading account. FTX has created unprecedented market turmoil, resulting in abnormal withdrawal requests which have exceeded our current liquidity, Genesis said recently. We are working on adding sources of new liquidity, said Genesis. Genesis has apparently reached out to both Binance and Apollo Global Management in search of new investment. But, this might still be just the tip of the crypto crash iceberg. As I am sure you know if you follow this channel, Coinbase is one of the few remaining cryptocurrency exchange companies. Although it is still operating, Coinbase has not had a good year. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Bitcoin sunk to just under $16,000 for the first time in recent memory. If you recall, Bitcoin peaked at an all-time high of $68,982.20 1 year ago. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.